So we're next going to cover the chart of accounts, but just quickly wanted to point out you've got these blue stars and these non-blue stars. So what this is it's favoriting. So things that you need to access regularly. So definitely fixed assets is something you'll probably be accessing quite a bit. You want to make sure it's starred, blue starred, and then it will be in here. So what you can see here is the 4 here are the 4 here with the blue stars on. So if you want them to be in here, so it's easy to access, you don't have to go to advanced and then this page, you can just pop the blue star in and it's here. You won't want that for all of them, but just the ones that you access regularly. These are all set as default, and to be fair, even I haven't changed these are the 4 that I've got there. So you probably wouldn't need to add any others because you shouldn't really need to keep going to the other settings regularly. It's just these ones. But yeah, you can set it up however you prefer. So as I said, we're going to go into the chart of accounts, and this is what makes up Xero in the back end, and it tells Xero how to put everything in the accounts together. So again, as usual, it's got a little video and bits that you can watch or read. I'm going to get rid of that. Now, if you don't know much about accounting, that's fine. I'm just going to give you a brief overview. If you've done a little bit of accounting or bookkeeping before, these terms may be familiar to you. But you've got 2 sides to the accounts. You've got the profit and loss, and you've got the balance sheet. So the profit and loss is your sales less your expenses, which gives you your profit or loss for the year. And your balance sheet is your assets and your liabilities and your equity, which show what your business owns and owes and what it's worth. So what we're doing with the bookkeeping and all the records is we're putting everything into the right area, be it profit or loss or the balance sheet codes. And the chart of accounts is what we call all of the accounts that make up those 2 parts of the accounts, if that makes sense. I'm hoping I'm making sense here anyway. And with bookkeeping, it is a double entry system. So for every transaction, there'll be a debit and a credit. And quite often it will be 1 in the profit and loss side and 1 in the balance sheet side. Not always, but 9 times out of 10 it will be. The good news is you don't need to worry about debits and credits because Xero will do the most of that for you. But just so you kind of get where it's going from. So for example, when you're buying something as a purchase, you're going to be debiting the purchases and you're going to be crediting the bank account, which is a balance sheet code because it's an asset. So what the chart of accounts is it's all of the accounts that you will use as part of the bookkeeping, and it's saying what type of account it is, be it asset, liability, equity, expenses, or revenue. So the way Xero is all coded is it starts with your bank accounts, which are an asset, and it also sets the tax rate if you're VAT registered, the default tax rate for that code. So you've got your bank accounts, you've then got your sales accounts. Sales, revenue, income, all the same thing, just different terms for it. Revenue is the accounting term, sales is the standard term, and revenue income is another accounting term as well. But sales, revenue, income, they're all the same. So you've then got the sales, which is part of profit and loss, and then you've got the purchases. Now, the purchases are split into 2 sections. You've got your direct costs and then your overheads / expenses. And the difference here is the direct costs are things that relate directly to what you're selling. So the easiest way to explain this is with goods, because it's the most simple way of showing the process here. So with goods, you are literally buying either the materials or the actual good itself into your business, and then you're going to sell it on. So that is a direct cost because you've bought it to sell it. You've then got things like accounts fees, marketing, training, which you've bought because you need them as part of the business, but you're not actually selling those physical bits on. You're not going to sell on your accounts fees, you're not going to sell on the training, although they make up part of potentially the cost of what you're selling, because obviously when you sell something, you're not just charging the actual cost of what it costs to make or provide that service, but you're charging a portion of all your overheads as well. So direct costs are things that are directly related to what you're selling. So as I said, it could be goods. For us, we can put our team members in there because they're doing the service, and that's a bit of a grey area. You can choose which way you want to do it. We don't. But if you're using a subcontractor, for example, that would be in here as a direct wage, because you're buying that subcontractor to do that job for that customer and selling it on. So they're all direct costs, and then you've got your overheads or expenses. You can call them either or. Some of these are physical costs, like advertising, accounts, bank fees, cleaning, so on. Some of them are paper costs, like depreciation. 99.9% of these will be physical costs. But yeah, you can go through it and see what they all are. All of the standard ones are in here that you'd expect to see. And you can add them and everything as well, which I'll show you in a second. So you've got all the overheads and expenses there, including your corporation tax. You then come on to your current assets. So current assets are things that you hold, you own, and they turn into cash quickly. So these are, for example, your bank accounts, although they are classed separately in Xero up here as banks. But in general, your bank would be that as well. Accounts receivable, people that owe you money, and any stock that you've got in. Fixed assets are things that you buy that hold a value and that you have in the business for a longer period of time. For example, office equipment, your desk, your chair, computer equipment, your laptop, your computer, buildings, motor vehicles, cars, vans, etc., plant and machinery, tools and things like that. Those are all fixed assets because you hold them and you keep them for quite a while before you potentially sell them on or dispose of them or anything. You've then got your liabilities. So these are things where you owe money. So current liabilities would be things that you're going to be spending out soon. So your accounts payable, so all your suppliers that you run to, HMRC, for your VAT, for your PAYE, your payroll, when you run the payroll, what that's going to be going out, and corporation tax, and things like that. Your non-current liabilities would be more things like loans, so bounce back loans when those are available, hire purchase loans for cars. If you get a startup loan, that would come into your loan, would be non-current. And it's something that you will pay out, but you pay out over a longer period of time, not in the next, say, 3 to 6 to 12 months. And then finally, you've got the equity. So that's the value of what you bought your shares for if you're a limited company, money that's you've put into the business, previous earnings, so profits from prior years or losses from prior years, money that you're taking out as dividends is all classed as the equity side. And when you put things into each of these, they go into the relevant reports. So all these overheads, expenses, direct costs, revenue, sales ones will all go into your profit and loss, and everything else goes onto the balance sheet. So it's really important when buying something to make sure that you put it into the right category so it goes to the right report and it's treated in the right way. So to add an account, you just literally come up here, add account, select the type. So let's just say we're gonna Everything's. What I'm going to do is I'm going to show you how you may want to track different types of sales. So at the moment, Xero's set up for just one type of sale. It could be you've got different things that you want to track and keep an eye on what's bringing in what money. So for example, you may have different product lines if you've got different products that you sell. So you could have, for example, if you're a clothes shop, you could have men's clothes and you could have women's clothes, and you may want to know the difference between the two. You may also want to have like an accessories or bags or shoes or something like that. So you can come in and add different types of sales. So you come in and you come down to revenue, and you can either choose revenue or sales. They both do the same thing. Put in a code. Now all the sales ones are in the 200 range, so I'm going to put 210, and I'm going to put sales type B. Now obviously in your business you would actually put what it is, but for this example I'm just going to put B in to put it in. You can put a description if it's not obvious, and then you can choose the tax for the default settings. So some things are tax deductible, some things have got VAT on, some things haven't. So for example, if it's children's clothes, there's no VAT on there, so you just set that to no VAT. Same with postage and things like that. So you set it as it needs to be done. Now, remember when we did the expense settings and I said you can also put whether or not to show them in expense claims? Here's the box to show it or not. Now, we've also got the dashboard, and I'm going to show you that in a second. And I'm just going to pop a tick in here. And the dashboard, if you watch the dashboard overview, is like an overview of the the key sales or expense lines that you want to keep an eye on. So I'm just going to tick that. And then enable payments to this account. So if it's, for example, something that you're likely to get paid for or get paid personally, so if you're going to be buying it personally and you want the company to know that you've paid for it, you may want to tick that box as well. So save that, and you can see that that's in here. If you want to adjust one that's already done, you can come in here and you can change the wording, you can change this wording, you can show it here. You can change the code if you want to change the numbers up, and you can change the type. I'm going to leave that all the same. So that's now sales type A, sales type B. And they're also in these separate tabs, so you can see them individually as the different types if you'd like to. What I would say is there's probably quite a few here that may not be necessary and relevant to you, so you could come in and you can delete or archive some. So for example, you may be a business that is online, you don't have an office, you're never going to have an office, so you may want to just archive some of the office related ones. So you can come in here. So a couple of them where they've got the padlocks, it means they've already been used, so you can't archive them. But for example, if you do want to get rid of them, and then you just pop archive and it'll go. So it's just nice to have it tidied up so you've not got too many things to choose from. But what you can do is you could always type in to find it. So if I wanted motor, I can bring it up, motor vehicle expenses. And if I was in all accounts, it would do the same thing. And it bring up absolutely everything to do with motor vehicles. And as I mentioned earlier, the difference between the overhead and the fixed asset. So the overhead would be something that's more of an ongoing expense. In the case of motor vehicles, that would be more like the running costs rather than the actual car itself. We will talk more when we go into fixed assets, more about differentiating between the two. So that's an overview of the chart of accounts. So just to go back to that dashboard, the watch list, just so you can see what I mean. So we ticked the sales type B. So what you can see here is we ticked it and it's now in there and showing on this watch list. So we can see quickly here what's going on, how much you sold this month and this year to date. So yeah, that's the chart accounts.